Hey there, everyone! Welcome back to our channel. If you're new here, I'm your name, and today we're diving into a topic that's super important for anyone planning for retirement: the difference between a 401 and an IRA. Sounds exciting, right? Well, it is, especially if you want to make sure you're set for the future. Now, before we get into the nitty-gritty, let me ask you a quick question. Have you ever wondered which retirement account is better for you? Should you be investing in a 401, an IRA, or maybe even both? Let's break it down together. Alright, let's start with the basics. Both a 401 and an IRA are types of retirement accounts that can help you save money for your golden years, but they each have their own unique features. First up, we have the 401. This is an employer-sponsored retirement plan. If you work for a company that offers a 401, you can contribute a portion of your paycheck before taxes are taken out. This means you're lowering your taxable income for the year, which is a great perk. For example, let's say you earn £50,000 a year and you decide to contribute £5,000 to your 401. Your taxable income for the year would drop to £45,000, potentially putting you in a lower tax bracket. Plus, many employers offer a matching contribution, meaning they'll match a certain percentage of what you put in, which is essentially free money. For instance, if your employer matches 50% of your contributions up to 6%, that's an additional £1,500 you could be getting. Now, let's talk about IRAs, or individual retirement accounts. Unlike a 401, an IRA is not employer-sponsored. Instead, you open it up yourself through a bank or investment company. There are two main types of IRAs, traditional and Roth. With a traditional IRA, you can also make tax-deductible contributions, which means the money you put in could lower your taxable income, much like a 401. However, with a Roth IRA, contributions are made with after-tax dollars, meaning you don't get that immediate tax deduction, but your money grows tax-free, and when you withdraw it in retirement, it's tax-free as well. So, for instance, if you contribute £5,000 to a Roth IRA and later withdraw it in retirement when you're in a higher tax bracket, none of that money will be taxed. That's a huge benefit if you expect to be earning more in retirement. Now let's talk about contribution limits. For 2023, you can contribute up to £22,500 to your 401 if you're under 50, and if you're 50 or older, there's a catch-up contribution of an additional £7,500, bringing your total to £30,000. On the other hand, for IRAs, the contribution limit is significantly lower, £6,500 for those under 50 and £1,000 more if you're 50 or older. So, you can see that 401s allow for much higher contributions, which can be a big advantage if you're trying to save aggressively. When it comes to withdrawing funds, there are some important differences to note. 401 withdrawals typically come with penalties if you take out money before age 59 and a half, unless you qualify for an exception. With IRAs, the same age applies, but Roth IRAs allow you to withdraw your contributions anytime tax-free since you've already paid taxes on that money. So, if you needed to access your funds for an emergency, a Roth IRA might give you more flexibility. Finally, let's talk about investment options. In a 401, your investment choices are usually limited to what your employer offers, often a selection of mutual funds. With an IRA, especially a self-directed one, you can pretty much invest in anything, from stocks and bonds to real estate and more. This gives you a lot more control over how you grow your retirement savings. So, to sum it all up, a 401 is employer-sponsored, allows for higher contributions, and often comes with matching funds, while an IRA gives you more flexibility with investments and potentially beneficial tax strategies depending on whether you go for a traditional or Roth IRA. Now that you know the differences, think about your financial goals and how each option fits into your retirement plan. Remember, it's always a good idea to consult a financial advisor to find what's best for your specific situation. If you found this video helpful, please give us a thumbs up and subscribe for more financial tips. And feel free to drop your questions in the comments below. We love hearing from you. Thanks for watching, and happy saving!